Hello and welcome to Rupee Rakshak's weekly market update. In today's episode, we will dissect and understand the top headlines that impacted the stock markets this week. To help us, I have two guests in the studio. Mohan Krishna Rao, who is a financial economist and the founder of Rupee Rakshak, and Sumant Ray, who heads research at Rupee Rakshak. So to start with, let's try to understand how the market moved this week. So Sumant, could you quickly run us through the levels that we should keep an eye on for the upcoming weeks?
Sure, Vijesh. So we have seen two major important events since last 1 week. One was the budget, and we saw some good things happening in the budget. So there was a huge tax relief from the finance ministry for the common people. And today again there was a monetary policy from RBI governor, and we have seen a surprise. Not surprise, probably it was in line with the expectation. So we have seen a 25 basis points of rate cut. So I think that is something good news as well. So as far as market is concerned, so let me quickly take you through the chart. So if we look at Nifty, we have seen a recovery of 0.33% last week. In fact, almost 3.4% since the budget. We are already seeing that much recovery in Nifty. If we look at Bank Nifty, we have seen around 1.32% recovery in Bank Nifty since last week. And if we look at mid-cap Nifty, we are seeing some bounce back in mid-cap Nifty as well, because in this month, majority of the sell-off happened from mid-cap and small-cap sectors. So we are seeing bounce back in mid-cap as well, almost 0.23%. And when it comes to small-cap, we have seen a recovery of 0.16%. So overall, we are seeing that buying is coming back slowly, but this is too early to say. But let's look at the major market levels. So as I mentioned in the previous session, in last week's session, so my levels are still intact. So I'm still having the same opinion about the same levels. So for now, my next level of upside levels would be 24,200, followed by 24,800 levels. Above that, where I'll feel that bulls are taking over right now, about above 24,800 level. But on the downside, if we again see further sell-off from FII, due to major reasons, it could be global uncertainties which are very volatile, and the situations are very volatile across the globe. So we can't predict anything what is expected out of it. In a worst case scenario, probably my level would be 22,700. Beyond that, 22,000 would be my final level. And as I mentioned in last week's session, 22,000 would be a golden opportunity for everyone. So who can withstand this pain and stay in the market, stay invested in the market, they are the ones will be real wealth generator when market makes all-time high probably in 2026, as I mentioned in my last week session.
So like Sumant said, the big news today was the repo rate cut. The RBI cut the rate by 50 BPS. And this rate cut is happening after May 2020. The last rate cut happened in May 2020. So Mohan, your quick reaction to it about this rate cut. Is it a good decision or a bad decision? How do you see this?
Yes, Vijesh, this is a welcome move. In fact, 25 basis points reduction in the rate cut, that is a very welcome move. And in fact, it's going to benefit a lot of loan borrowers. If we just look at the history of the rate cuts in India, in fact, this has happened only 5 years back. It is the first rate cut that is happening after 5 years. Right. And that too for a new RBI governor, Sanjay Malhotra, coming in, and he has the privilege of announcing this rate cut. If I look into the history of the repo rates, 10th February 2022 is when the repo rate was 4%. And 7th December 2022, it was increased all of a sudden by 225 basis points. That is 2.25%. Oh. In just one jump, the repo rate increased from 4% to 6.25%. This is the middle of the second wave, that is COVID second wave probably, and then the inflation has shot up so much. RBI did not hike the rates for many months during the COVID, and suddenly there was a compulsion to increase the rate from 4% to 6.25%. Again, it was increased in February 2023 to 6.5%. After that, we have not seen the rate cut.
Okay.
And people are borrowing at this high rate. Today, RBI governor has announced a rate cut of 25 basis points. This was the first revision downwards. And this is going to immensely benefit the loan borrowers, not just the home loans, it is applicable across, be it auto loans, be it personal loans, be it business loans. In fact, the biggest advantage is for the corporate borrowers, because for them 25 basis points reduction means that much more money available in their balance sheet. And that much more they can bring down the cost of their product, and they can increase the demand, or they can take advantage of that. Again, there is a caveat to this, that this 0.25% cut in the rate is applicable for the banks. Now, not all the banks would pass on this benefit to the borrowers. Because if I have a housing loan with SBI, or if I have a housing loan with HDFC Bank, if HDFC Bank does not reduce, does not pass on this 0.25% to me, and if I have a loan with HDFC Bank, I will not be benefited by this. So what I should do as an end user? So whoever is a borrower of the loan, they have to check in the market whether their banks are passing on this benefit or not. Because if I have to translate this, Brijesh, into the real benefit, let's say if someone has a 50 lakh worth of outstanding balance, and he has a 20-year loan that he has taken, and if this 25 basis point is applied, probably he will not pay 10 months EMI. So number of installments will reduce by 10 months. So that is something that everybody should take, and if your bank is not passing on this rate to you, you should go to another bank which will give you this benefit. And in effect, the rate cut is always good for the economy in the larger sense that we already have a good news of up to 12 lakh rupees no tax, and lot of money is left in people's pocket, and now with the EMI also coming down for you, or the number of installments coming down for you, that is going to also help people in terms of having more money, and it is definitely a very welcome move. And I have a question for you, Sumant, and what do you think this rate cut will impact the stock market? Today's movements did not show anything.
It hardly impact the bank nifty today, right?
Right. I mean, if you see today's market, actually, even after this, there was no much enthusiasm in the market as such, because we have been seeing market to fall for quite long. So I think there is a lot of pain in retail's pocket.
Maybe I feel it was expected. That's why they done
probably it was in line with the expectation. So market did not. There was no surprise element in that. So of course market did not react much on that. But overall, if you see, as RBI governor also mentioned, the rural inflation has eased to almost 4%. So rural is already seeing a bounce back. It is the urban inflation which is still not as good as rural inflation. So and now the rate cut will actually help people in the urban areas, because of course most of the home loans and car loans are mostly taken by the people in urban areas. So with this, there will be more money at their disposal. I'm sure, as Mohanji explained, how much actually they can save. Almost close to 1 year, 10 to 12 months worth of EMI they will be saving. So that's a huge relief for the people who are having large amount of EMIs. So I think things will not change overnight, but slowly, as we are seeing that rural is improving, and with the tax cut and the RBI rate cut, slowly in the urban areas also we'll see some improvement in as far as inflation is concerned. So I think it's at a good stage where market can start forming a base. See that
bulls should take control.
Bulls should take control over that. And as I'm very hopeful, as I mentioned again, that I'm eagerly waiting to see where market takes us on 2026. So I am very hopeful that things will improve going forward.
Another big news that was creating headlines this week is how Indian migrants were deported from US by Trump government. We have seen it all over the news. We have seen the handcuffs and the chains. So Mohan, how do you think it's going to impact the US and India's diplomatic ties? Do you see it's going to impact the trades and or the tariff, all those things? Do you think it's in any way going to impact?
More than the diplomatic ties, Bijesh, this is a lot of embarrassment for we Indians.
Yes.
So let me just look at my data, and if I look at the overall number of illegal immigrants who are in US, according to the US Census Bureau's American Community Survey, this was a 2020 data.
Okay.
It says the number one country which has illegal migrants is the Mexico, which about 11.6 million, which is almost about 1 crore 16 lakh in our language. And China has close to 29 lakh immigrants in US, and Cuba is the third in place, which has about 13 lakh immigrants, and India has about 12 lakhs, 1.2 million immigrants. This is data as of 2020, illegal immigrants in US. And out of that, the resources say that about 70,000 people have been shortlisted, and out of that 20,000 Indians illegally staying in US are likely to be deported to India. And we already seen the first set of 220 people or odd people who came in the US military plane. They were sent back to India. This is a problem for any country. The illegal immigration is something that every country wants to avoid, and we also have in India plenty of such.
Yes.
Unfortunately, we don't have the exact, precise numbers. We have huge amount of, immigrants all across the Indian borders. We have this similar problem. So this is something very, very natural. We have seen the External Affairs Minister, Mr. Jaishankar, addressing the press and talking about it, that women were not handcuffed, and you were talking about the chains and the handcuffing. And of course, they are the people, anyway you are deporting them. What is the point? I don't know, in cuffing their hands or chaining their legs. There was no point.
It was
it was more to showcase that they are some kind of criminals and kind of a thing. Of course, it is very embarrassing. Our people are treated badly by other countries, and we don't know what they have done, what is the true story. But it is definitely a big problem, according to me, and it has to be sorted out. I'm sure the Indian government would take action and sort this out.
Another big news that is drawing attention is the tariff that is the Trump government is going to impose to many countries. So, Mohan, what is your views regarding that? How is it going to impact the economies across the world? So, what do you think about it?
The trade tariff, Bijesh, if we remember, we talked about it before the oath-taking ceremony of Mr. Donald Trump. He is going to come in and start imposing all these tariffs, and it has already happened. So we have seen in the last 1 to 2 weeks huge amount of activities that are happening. There are actions and reactions.
Right.
So he initially started out with the Canada and Mexico. He said 25% tariffs immediately, and it will increase every month by 25%. And retaliation came in from the Canada, and it said we are going to also impose any of the imports from the US. And similar thing happened with Mexico, and even with China, 10% has been already imposed, and there is a news that there is going to be lot more increase. So far, nothing much on India. So it is still waiting for India, what is going to be the situation on the tariff. Now, this is likely to continue for another 3-4 months because it's not easy just like that you send one statement and write one order and say that tomorrow morning you will have all the trade restrictions and you will have to pay additional tariffs on any of the imports. It's not practically possible because there are a lot of agreements done for months together. And you can't stop. The trade comes to a standstill, and you cannot impose any such things, because if you see the shipments to order and to reach, it takes weeks together. So you can't put restrictions just like that, one. And then there is also a retaliatory action from the affected countries. In fact, across the nations, if you see, it has been the talk of the town in terms of international news. Everybody is talking about every day and night. We are keenly watching as to what are the new developments that are happening and which countries are getting affected by what. The biggest of the imports that happen in US is from China, and China has always a trade surplus. Now, the connection between USA, Canada and Mexico is highly complicated because they have both imports and exports. It is highly connected. If you see, it was all just a common group of countries even before the America came into existence. So, now they have very close relationships because America needs labor and these guys needs produced products, and there is a unimaginable connection between these three countries. That's why you see the same problem also exists for immigrants. Now, it's a complicated situation between America, Canada and US, and we need to wait and watch how this gets settled out. And as far as China is concerned, China is the factory of the world. So, everything in the world is close to about 30% of the world's products are manufactured in China. Now, whether you make changes in the tariff or you don't make changes in the tariff, what you can obviously not control is the manufacturing capability at the cost at which China makes it. It is impossible for anybody to make any product that China manufactures at the similar cost. Also to control the raw materials, particularly if you talk about the solar, the rare earth materials, it is impossible for anybody, even India, it is difficult to compete with China in terms of the cost of manufacturing. So, that being the case, whether you apply tariffs, you don't apply the tariffs, the control is in the supply and control is in the cost. Now, if you do not buy from China and if you make, if it costs more, that means it will increase the inflation in your country. It is impossible for your own, like we are seeing the Make in India kind of campaigns. 10 years that we are running Make in India, still manufacturing has only grown by 5-6%. The industry growth is only 5-6%. So, it is impossible, it takes decades to build manufacturing capabilities, to make the components. Even today, most of the electronic, we boast of that the mobile phones are made in India. It is actually assembled in India. The components are still made in China. Many of the electronic components are still not made in India. It is not easy to make at the cost in which the China makes. So, there is an inbuilt security to this, that it takes many years to build the capability to manufacture. You can actually put tariffs just like that, but you cannot make the capability to produce products at a cost that is possible for China, and they have done it 50-60 years. It's not an effort in just 3 or 4 years. It's not even in one president's term. It's impossible to do. So, that being the underlying cause, what will happen is it is just going to be a negotiation table. So, you want people to come to your negotiation table. So, that is the reason all these things are happening. Now, can you provide me at the lower cost? You can't say that, why don't you sell it to me at a lower cost? So, these things are always there between the countries. So, especially now it is more prevalent because everybody is thinking my country first. So, that is going to be tough because your country cannot have all the resources. Whether it is men, materials, money, machine, you cannot have everything in one country. You will have more men in China and India and more technologies elsewhere. So, it is not possible. You need to find a new world order if you have to kind of get into some kind of equilibrium that everybody can live peacefully. So, you need to have good leaders in every country to understand the fact and get into that equilibrium. So, till then we are going to have all these problems of tariffs, and tariffs are likely to affect immediately. We do not know how it will affect depending on what country's central banks. It's also going to affect on the currencies. If you see the deflationary things that are happening with the INR USD, it is going up. So, it is going to affect all the countries which have the trade deficit with US. No, it will not affect China because China has a trade surplus. China has made money by selling to the US and they have more surplus than any other country. Japan has a substantial surplus, and we have trade deficit with US. And if you look at the other countries like Canada, Mexico, all of them have trade deficits. The countries that have trade deficits with US, it is likely to affect. But the countries that have trade surpluses, it will not affect in the near future. They'll always go and find some other markets to sell. The good thing about India is that we ourselves is a huge domestic market. For us, the Indian population of 140 crore itself is huge. So whatever we manufacture, whatever the agricultural produce, we are insufficient in agriculture. We are importing tur dal, we are importing wheat from outside. So if you produce more wheat, we have so many people to eat here only. So what I am trying to say is that it's not a problem for India per se, whatever trade wars that are happening, because ours is a huge domestic market. In fact, we are going to benefit from anything that is happening in the trade wars, because if the US does not buy from China, where else can they buy from? If we have products, they can buy from us. So Indian corporates with export potential, they are going to benefit and get a pie of whatever that China is missing, whatever Mexico is missing. Already this rearrangements will start happening. You would have seen that Canada is, after the imposition of the tariffs, now they are saying that I'll go with China, I'll go with Russia, I'll buy Russian oil. So that rework will happen. So it will also help India by and large. It will not harm India, and it will probably, if at all, if it is going to be any effect, it's going to be a advantage only.
I guess we get to know this in next few months to come.
And would you have anything to add on this, Sumanji? Would you like to share?
I feel, as I shared last week's session also, India will be the least impacted among all the countries in the world. And as you said, the trade deficit between US and China is more than $300 billion. So it makes sense for them to, restrict little bit, because it's a huge deficit and China is trade surplus. And even if that happens, it is an advantage to India, because India is the next, the only country second to China who has the technological know-how or the skilled manpower who can actually match China in terms of production to meet the US import needs. And I think government is also working towards that, and a lot of PLI schemes are floated to make sure that our manufacturing sector improves. And we are seeing that even in electronics manufacturing, and especially in the processor GPU levels, government has provided lot of subsidy to especially Tata Tech and some other companies who are working on this sector. So hopefully we'll see some good outcome of those manufacturing sectors. So I think that will in turn help India only. So I feel we are kind of safe in that regard from all the, we are immune from all these tariff wars between US and other countries.
More than the tariff, Sumanji, for me, I am more scared about the technological disruptions rather than the tariff wars. If you look at...
So with that respect, even let's say the kind of tech innovation China is doing, so the US is already threatened because they are now taking over US. So if even in technology sector something has to be done, India is more trustworthy, because there is always a trust issue with China. And India has that capacity and capability to match China. So I think India has the upper hand when it comes to technological partnering with other countries.
Like this ChatGPT's founder changed his statement once he came back again and changed his statement and his point of view in terms of how India can grow the technology.
Right.
So initially he said, you can keep on trying, but you will never match us. Now
as you can see, Sam Altman last time, he actually had a very embarrassing view for India, and they said we can never match their capability. Yeah. And now he says that my statement was taken out of context,
yes.
And India is already ready to take over, because India is the biggest consumer for ChatGPT. Right. So I think we already see that they are coming to us now. So they have no other way to go, and China is the biggest competitor for the US technological domination, and they know only is India if they partner with, which actually together they can beat China.
So the ChatGPTs and the Microsofts, the Google Geminis of the world are changing their stance and they want to be more friendly with India.
So on that note, thank you so much both of you for taking out time and joining us. So that's it for today. We'll be back next week with more news and more analysis. Till then, Take good care of yourself and happy investing. Thank you.